doing the BRRR strategy on a $30,000 house. What's going on YouTube? Thank you for watching Mentorship Monday. My name is Matt. My company is the DeRosa Group, and you guys should check us out online at DeRosaGroup.com. On that website, you can hear about all kinds of cool stuff that we're doing as an investment company, and you can also click on DeRosaGroup.com/coaching because we're rolling out some new programs, including a coaching service that you guys might want to hear more about. So go to that DeRosaGroup.com/coaching, and you can check out some of that kind of stuff. Today's question for Mentorship Monday, which was emailed into helpme@DeRosaGroup.com, that is helpme@DeRosaGroup.com, that was sent in by Charles. And Charles is from my hometown of Baltimore. And that's awesome. That's my home city, and I appreciate you for renovating Baltimore and making it a better and brighter place, Charles. So Charles is looking to scale up a business on he's buying $30,000 houses, buying them, fixing them up, renovating them, and all that. Sounds like he's doing really well. Congrats, Charles. I love your numbers that you're doing here, which I'll review in a second with all you guys too. But he's looking to do the BRRR strategy on a $30,000 house, meaning he's buying them, renovating them, and renting them out and refinancing them. But the problem is he's doing it on a $30,000 house, and it's just his construction. Let's see, he bought a property all in for $31,000. It appraised for $45,000. And he's just buying them. He bought a property, I think, for $26,000, renovated it and that. So he's just playing in the smaller sandbox, which is okay. There's nothing wrong with that. There's nothing wrong with doing deals at $30,000, $40,000 a piece, even $50,000 a piece. A lot of people poo-poo that. That's how I got started. There's a lot of money in that end of the world, because Charles is getting $1,300 a month in rent, and his monthly mortgage payment is $225 a month on this one property that he's got in question. But the question Charles has is, it sounds like he bought the property on a credit card, by the way, which is not, I don't recommend that long term. It's hard to scale that. Of course, Charles knows that, which is why he's asking me this. So he's renting for $1,300, monthly payments $225. God bless, very good. But how do you scale it? How do you take that and do it times 10? So here's how we did it when we first got started, Charles. What you want to do is you want to go and find either a line of credit, so you can find access to say $50,000 to $100,000. That's the first thing you got to do. Put that out there. You need $50,000 to $100,000, whether it's your own money, credit card money, or private investor money. My book, Raising Private Capital, will tell you how to go about finding that in your own network. So check that out. You can also find that on Bigger Pockets and on DeRosa Group's website as well, Charles. But find that, and that's the other thing you can do is do an unsecured line of credit from your bank. So some people call it a signature loan, but it's really just your personal credit up against that loan, and you can borrow between $50,000 to $100,000. No matter how you do it, Charles, locate that much money somehow in your network, okay? Then go and buy a smattering of houses, renovate them, and then if you refinance them as a package, as a portfolio, a bank will take you seriously. If you walk into a bank and say, I want to refinance this $40,000 house, they're likely not going to give you the loan. Most banks won't give you the loan, especially if you want to run it like a business and hold it into an LLC and run it as a corporation versus holding the property in your own personal name, which I believe is what Charles is doing. So if you want to do it the right way, which is holding it in an LLC and getting a commercial mortgage on the property, the banks are not going to want to work with you at $40,000. They will work with you at $100,000, $150,000, $200,000 because it's the same amount of paperwork. It's the same amount of work for them, but just a $40,000 loan doesn't generate enough fees and income for them for that loan to be worth it for them. Just to be honest, I mean, they're in business to make money. It's not a hobby for them either. They got to make money too. So they're going to want to do deals that are 100 or north. And so what you guys want to do is assemble a group of small properties like that. Go to the bank and ask them for something called a blanket mortgage over all of them. But if you do a blanket mortgage, make sure that the bank will allow you to pull one out at a time and sell them if you want to. Meaning you can discharge the mortgage individually or as a whole. Okay, it's called a blanket mortgage. A local small community bank's going to do it for you. There's also lenders on Bigger Pockets that'll do those kinds of things too. So that's how you're going to have to structure it, Charles. Again, I love your numbers. numbers, $225 a month with the tenant paying $1,300. Phenomenal spread for you. You're going to need to get yourself access to a large pool of capital so that you can expedite that and move it forward. Great question, Charles, and congrats again. I love that you're renovating Baltimore City. I appreciate you doing that in my hometown. If you guys have questions, email them to helpme@DeRosaGroup.com. That is helpme@DeRosaGroup.com, and I'll answer them right here on the YouTube channel for you guys to learn from. Thank you, Charles. Thank you guys for watching. Have a great and profitable week.